Gentleman yields back. The chair now recognizes the gentleman from Pennsylvania, Mr. Meuser, for 5 minutes.
Thank you very much, Madam Chairwoman, and thank you all very, very much for being here with us. So, small businesses, backbone of America's growth, they do face significant barriers in accessing capital, including from excessive regulations, inflation, interest rates, new bank reserve requirements, loss of profits, scope requirements, the list goes on. The regulatory processes at the SEC have lacked inclusion, for lack of a better word, and do not foster trust and facilitate market participation. So I have two pieces of legislation noticed at today's hearing aimed at addressing these issues, including the Access Act, H.R. 6825, and a discussion draft of legislation that will increase accountability and provide transparency into important SEC staff-level actions. So, Ms. Schultz, I'd like to start with you, please. As you know, companies are required to file financial statements that are reviewed by independent public accounting firms if they conduct a regulation crowdfunding offering that exceeds $100,000. My bill, H.R. 6825, the Access Act of 2023, raises that threshold from $100,000 to $250,000, as was done without issue during COVID. So I'll just ask you, do you think this legislation will have a positive impact on small businesses that are considering raising money in a crowdfunding offering?
I believe so, and I think the fact that it was done without issue for more than 18 months during COVID is a sign that that was well accepted and is a reasonable change to be made.
Great. And the fact that it sometimes will cost as much as $10,000 for these small businesses for their accountants and other requirements to raise $100,000. That's a pretty steep percentage.
Really, any additional cost that a small business needs to undertake to deal with its financial statements at that small of a capital raise is an undue burden.
Great. Thank you. Mr. Gulliver, a discussion draft of legislation attached to this hearing that could make certain actions by SEC staff, including Rule 14A-8, no action letters and denials, reviewable by the Commission, and require a report to Congress of their actions. We sent it to you. I'm not sure, Mr. Gulliver, how familiar you are with it, but in doing so, the goal is to increase accountability, period, around such SEC actions that take place outside of the formal rulemaking process. If you're familiar with what we just recently sent you, and I appreciate it if you are, could you comment on this action?
Yeah, I think these no action letters now are handled by the SEC staff through delegated authority from the Commission, and there is, not a lot of transparency in how these decisions are made. They're made largely at the staff level, and I'd be supportive of a bill that would enhance transparency of these decisions, especially when they have a major impact on the market.
Have you found, not to be political here, but that these concerns of the process have been or could be politicized by SEC staff, especially with the ESG-related shareholder proposals?
Yeah, I certainly think these no action letters in general can pertain to issues that are political. So as SEC staff,
right. Just get subjective at a certain point, yep. Right? Mr. Burton, question for you: on a scale of 1 to 10, how disruptive has the SEC's speed of new regulations and other actions been to capital markets and capital formation this SEC over the last 3 years and 2 months, on a scale of 1 to 10, or if you want to express it?
Well, I think there's two sides to that. In terms of the proactive regulatory agenda, it's a 9.5 to 10. The climate change rules and then all the various things they have in their pipeline and so on down. But on the flip side, it's close to 0 because you mentioned concern about entrepreneurs and small businesses trying to raise capital. There's a need to fix a lot of things, and the SEC has simply utterly failed to address the entrepreneurial capital formation issues. Finders being an example, your crowdfunding rules. The SEC made the crowdfunding regulation much worse than it had to be, and so on down the line. It's a long long list of failures of small businesses by the FCC.
My next question was going to be on a scale to 1 to 10, how helpful, but I don't think, I think you've just answered that. All right, I yield back, Madam Chairwoman. Thank you.